A bookkeeper will record financial transactions and they'll keep records, which are backed up by valid documentation. These financial transactions are entered into the accounting records, which are also known as the books. So financial transactions can include a number of things. They can include sales, which is exchanging of a good or a service for money. They can include purchase, which is buying a good or a service. Payment is a transaction, which is the transfer of money to somebody else, for example, for wages to an employee. A receipt is getting money from somebody else, for example, from a customer. Petty cash is also a financial transaction, and that's paying for low value items with small funds of cash. And payroll, which is wages and salaries paid to employees or any other payroll taxes, are also a financial transaction that's entered into the accounting records or the books. And these records are then used to prepare sets of accounts, which are also called financial statements or financial accounts or statutory accounts. It is important when you're bookkeeping that you keep accurate and complete records. You also have to remember that the work that you're doing is extremely confidential. It's important that the business only records transactions that specifically relate to the business. This means that business accounts must not include transactions or personal expenses that relate to the owner of the company or the business. And this is much easier for a company than it is for a sole trader, but you must be very, very careful about this, because personal expenses are not allowable on tax returns and you can receive very, very heavy fines if you do include them. It's also important to remember that accounting is the process of using bookkeeping information, which is the recording of transactions, to prepare financial statements. So if you want to know accounting, the first thing you must learn is bookkeeping. This diagram represents the bookkeeping and accounting flow, and we'll go through this now one stage at a time. So first of all, what we happen is business financial transactions, which are your sales and your purchases. And these give rise to documentation, and your documentation is going to be invoices and credits. Your invoices and credits are then stored and entered into your prime books of entry. And you have a number of prime books of entry, such as your sales day book, your sales returns day book, your purchase day book, your purchase returns day book, your cash book, your petty cash book, and your journal entries. And all of these prime books of entry are then summarised to give you your ledger accounts. And you'll hear bookkeepers and you'll hear accountants say that they're really busy at month end, and that's because at month end they summarise the prime books of entry into the ledger accounts. The ledger accounts then make up the trial balance, or the TB, and out of the TB we can then separate the balance sheet and the profit and loss account. Now, you may also have heard business owners say that their balance in their bank account doesn't equal their profit at the end of the period, and they'd ask the question, why is this? Well, the difference between the profit and loss and your bank balance can be found in your cash flow statement. And your cash flow statement is a reconciliation between your profit and loss account and your balance sheet, and shows where all your cash has been utilised throughout the year. So going back to the first few stages, business financial transactions give rise to documentation, and this documentation is entered into the prime books of entry, which are then summarised to give ledger accounts, which make up the TB. All of this here is the role of a bookkeeper. And the first two sections, the first three sections, is basically the recording and the classifying of data. We then look at summarising the data in the ledger accounts and the trial balance, and we look at reporting and communicating the data in this last section down here. As I mentioned, it's the role of the bookkeeper to bring the financial transactions and documentation up to the ledger account stage, at which stage an accountant will then take over and will prepare a trial balance and will prepare the profit and loss, the balance sheet, and the cash flow statement. This document is available for you to download in your additional resources.